Hey everybody, John Duncan here. I'm with Dr. Nick Messina again. You saw him last week. And today we are going to discuss a topic that's near and dear to both me and Dr. Messina, which is high achieving network marketers. Nick, welcome aboard.
John, I remember about 5 years ago, I came to you with this topic of network marketing and asked you about the business concept. And I remember you looked at me like I was out of my mind. But credit, you actually looked into it and studied the thing and found out it was viable. But my big question is why? What is the problem? Why don't financial people understand the business model?
Well, like me, I think it was actually like 6 or 7 years ago
Yeah,
that
it
came to me. And I remember we were sitting around talking about it. And everybody already assumes like a doctor, an attorney, a business owner, like a business, a retail business, that they, have assets and that they have an income to manage. But network marketing, when you first came to me, I was thinking like Amway, you
yeah,
know, and what was in my head was, I mean, it's terrible. I don't think this way at all anymore, but I was thinking that Amway scamway, you
yeah.
know, and in researching it with you, it is, I always call it like this. They're a lot like the big producers in that business are like pro athletes. And what I mean by that is there is a high failure rate, just like there is in any business. Like a lot of times I always think of like real estate. How many realtors make 1 million a year? Not
Yeah.
many. How many fail? Even in the financial business, it's the same thing. But in network marketing, there's a high failure rate. So the ones that survive and thrive, then they come into the financial world because their income is larger than life, and they come to a CPA or to a bookkeeper or a financial advisor. And I fortunately in working with you, and you've introduced me, and I work with a lot of high end, very high end producers in this marketplace. And I talk to other financial people, and they're like, "Really? Like what?" Like they just don't get it, and they think of it more like just maybe it's the interpretation is a little messed up. But we both know for sure that it's a great business model with the right companies. And there is a lot of what I'd like to call like super producers. They have the skill set. They've been in the industry for a lot of times multi decades. They've been with multiple companies, and now they're in a position they're making not good money. They're making like pro athlete level money.
Yeah.
And basically, today's talk is about it. Really, we were talking this before we jumped on. It's for people probably toward late 40s, 50. They've been in a career for quite some time. They're at the peak, um, and they might have even been with companies that have done really well and then went away. Whatever. I mean, I don't know how many people that I work with that they had built a large income and then it disappeared
Yes.
because the company did. So this is kind of what we're going to talk about is really advanced type problems that happen. And I would say to pinpoint good for the people listening to see if this is something you should be paying attention to. This is really geared to the person that's in the mid six figures and up, like a 500,000 a year and up. Wouldn't you agree with the things we're going to talk about?
The things, because it all comes down to everybody starts off with kind of the same business plan, right? And then,
Mhm.
I've seen some people in network marketing just take off like a rocket. And it seems to me like they kind of, they laid down tracks and outran their tracks. They outran their business plan and came into problems that I think they never expected with money.
Yeah, the first problem that one of the clients you introduced me to was told me one time is that 90% of people that start earning, she was basically referring to like over 100,000 and up.
Mm-hmm.
90% or more end up with tax problems.
Yeah.
And what I mean by that is like IRS notices, can't pay the tax. And it's because they work and work. What did you say to me? This was a great thing. When you were first explaining it to me, you said that it was like these guys push push the train up the,
like a train climbing a hill, and then because of the residual nature, once it crests the hill, the brakes go out and the train keeps rolling and the money keeps coming in.
and that's what happens. Like they get to whatever that dollar figure is in their company, and then they start going the other way, and that income, I've seen people go from 500 to $1.5 million in what, a year and a half, like just that quick. And as me and you always discuss, because we're always talking financial topics, the level of planning at like 100,000 tax wise is very simplistic, especially if you own a home, you've got a couple, you've got a lot of deductions. And as you were telling me when we talked a while back, as a doctor, you got to 100, then you went to 200, then you went to 3, and you just saw your effort level was going higher and higher.
Yeah, the harder I worked, the less I got to keep.
Yeah, so like the first 100, you almost kept all of it.
Yeah.
The second 100, now you're like, whoa, they took like half of that additional, and then you go up again, and it just creates, especially if you've never made that level of money before, it is very disturbing to see half of the money just disappear. And then you go to a bookkeeper or a CPA, and it's too late at that time. And here's why it's too late: because you already have the 1099. There's no strategy.
And then they always tell you, well, you should be thankful you're paying taxes. That means you're making more money. That was the answer I always got before I met you.
Well, that is true maybe the first time around, the first year. But after that, there better be a strategy in place to absorb that. Otherwise, I mean, as we're always talking about, some of the very high scale clients that I've worked with, the first thing that they ask on any idea is, what's the tax angle? They don't even care what the program is that I'm wanting to share with them. What's the tax angle? How can I eliminate? Because they understand, and just like a lot of network marketers that have been there for years, taxes are number one. If you can't control that thing, you can't out earn it. Like the bigger you get, the bigger that bill gets.
Yes.
And it's not in a proportionate, because we're in the, what do they call it? I hate that word, but they call it the progressive tax system. It's not progressive. I mean, it's just a slant right up to the top. And for people like where I'm at here in California, that slant is really quick. It's not just kind of gradual. It's you're here and now the tax rate. And so here's the things to look out for. When you get to 6 figures and above, and again, this talks more for mid 6 figures and above, what happens? First and foremost, your deductions disappear. Like the common stuff isn't available like it used to be.
You out earn your deductions.
You out earn your deductions. And what's really crazy, like now with that new SALT tax, where you can't deduct out, and the mortgage situation where the mortgages have been capped, they're constantly attacking higher and higher levels of income. And so, people, this is something that you and I are always talking about. It's such a strange thing. Here's the deal. When I refer to like a pro athlete, this is what I mean. There are people, you and I both know, that by God, they have been killing it at seven figures and above for 10 years plus, like 10, 15 years. But there's others that will hit that peak and be in it for a year, 5 years, and whatever's going to happen, right? So any loss due to taxes because of no strategy, and this is something I'm always talking about, and we agree on it, I think, Nick, is using, I don't want to get complicated here, but every dollar lost over the next 30 years is an $8 loss.
Yeah. Yeah.
So if you lose $1 or $1 million over a span that could have been strategized to keep over a 30-year span, that's $8 million.
Yeah. It adds up quick.
And with network marketing, the way the design of it, honestly, I don't think they sell it correctly from the stages, because it is the really probably in today's world, the greatest business model ever conceived for the average person to actually make big, big money without taking the risk. I'm not here to sell somebody on doing it, because you're already doing it. But what I'm saying is, you can take somebody that is not having to take massive risk. Can you imagine what it would cost to start one of these companies?
Yeah. I mean, it's totally leveraged. You love leverage.
I love leverage, and it is the leveraged example, and the fact with the technology, and it's able to build all over the world, different companies. So here's the deal. Taxes are step number one of everyone I've ever worked with from network marketing that's making good money. Because what they're typically doing is this. I'll tell you what they're usually doing. They start making some bucks. Now it becomes tax time. The first step is they go open up a SEP.
Yeah.
Which at that stage of the game is not a bad choice, because they don't know how far this is going to go. You know what I mean? It's new to them with that company. And so they do that, and they defer out some taxes. And the next year, they either kept it going or they didn't, but let's just assume they did. What happens is then they start relying on this tax deduction. And usually if they're making a lot of money, then whoever's around them will say, well, you need to do a defined benefit plan.
Right.
Which is just an upgrade. Think of it this way. It's just an upgraded SEP. So they upgrade. All they're really doing, and I don't want to say, and I don't want people to take it the wrong way, but if you're building some assets and you see this longer term, what happens is that deferred money, it's still going to be taxable down the road. It's not a deduction. It's actually just a deferral. And honestly, Nick, I've went around, I'm always talking with other advisors, CPAs, all that kind of thing, because I have to, because clients have people they are already working with. Here's the deal. Even most CPAs mentally they don't really think about it like I do in the terms of what's the back end when you cash out of this thing. They actually, you can go even here in the Newport Beach area and up in this area, you can go on, I went on several CPAs websites and it'll say, max fund your qualified plans. It'll give you the tax breaks you're looking for. It's not a tax break.
Yeah.
If the people watching this take anything from today's conversation, this is number one, a deduction and a deferral. What's the difference of the two? The difference is And I'll use a simple example. It's like your mortgage. If you're deducting your mortgage interest, really that's a deduction. Why? Because you get to write it off of your taxes. And in essence, the government is giving you part of your mortgage cost, the interest, back to you. So it's a deduction. A deferral is just like if I said to you, Nick, hey, I'm not going to give you any money, Nick, on something, let's just defer it. Let's just pass it, like kind of like the politicians do on balance on a budget. Let's just kick it down the road, let the next administration deal with it. But here's what, I'd been in the financial industry almost 20 years and nobody really broke it down for me. I was under the same assumption until I wasn't under the same assumption. And here's what I'm saying. A deferral not only defers the taxes or the tax calculation, it defers even knowing what the tax rate is. And here's what's super important. If you were a guy and you deferred, let's just say $1 million over 10 years, kicked it down the road, and that million grew into 2, so there was $1 million of interest on it at the end of, say, 20 years. You don't owe just on the deferred amount, you owe it on the interest too, at full tax. And I'm not saying it to scare anybody. I'm saying this is just, there's thresholds. If you feel that you're at, let's say you're at company X and you're at 500 grand a year, you don't even see it going very long. You're just riding it out till that wave crashed and you don't have any assets. Well, you know what? Deferral makes a little bit of sense. But if you're pushing the envelope, your business is growing and you see yourself building, you're getting assets, there's way better options that are beyond deferring. They're actual deductions. 2 quick, I'm not going to go into them, but 2 quick ones that we use a lot. One we use a lot of is conservation easements. Most people aren't aware that you can get gigantic deductions with conservation easements that are powerful. In fact, I had one number here. I'll just give you a stat. One of our clients here is network marketing. Gross income was 1.2, saved $119,000 last year.
Of tax money that was already earmarked to go out the door.
Yep, almost $10,000 a month.
Yeah.
Which is more than enough to make they have a beautiful home to make their mortgage payment.
Yeah.
And live, actually it's well more than their mortgage payment, but it's the mortgage and all their bills saved. And again, take that over 10 years. What is that? 1.1 million? That's another year added to their income that they don't have to work for. And just like to really talk about it, you and all the people that I've met through you because of your affiliation as a consultant with network marketing, the business itself, it's an incredible, when it works, right company, right everything, to be able to generate that type of income year in and year out, residual wise. And I know, believe me, I understand if you're making 1.2 or anything near that or above, you work as hard as anyone.
Absolutely.
It is not like from the stage, we're just going to build this thing and then it's all good.
Yeah.
It's a continuous journey. And so that's one thing I would argue with what I've heard from people say sometimes, but if it's continuing, it's like a farm and continuing, taken care of, incredible income can be generated. And what I've seen as well, once the tax part is put to bed. Oh, I was going to mention one other thing. I knew there was something slipping my mind on taxes. I even got another piece yesterday that I'm reviewing right now that has to do with solar. And I'm not talking about solar on your own home.
Mm-hmm.
This company does the same thing that this company does with conservation easements. They use solar and they take it to nonprofits. And the nonprofits buy massive and then they sell it to investors because the nonprofit doesn't need a tax break. But they package it and the government's given their okay on it, and you actually get a massive tax break for that. So you're helping the nonprofit and at the same time getting a legitimate large tax deduction. So those are two. One point I would say though, this is huge, Nick. The group that gets into the trouble, 90% of the first people making big money, they get into IRS trouble, right?
Yeah.
Here's the secret when it comes to real deductions. You know what it is?
Tell me.
It costs money.
Yes, yes.
Like, in other words, to do a conservation easement, I'm not going to go into all the numbers, but let's just say you're in 2019. And to use a conservation easement, you had to put in, let's just say, $100,000 to get a $200,000 tax savings. So your net would be 100,000 tax savings. You have to have the 100,000 to pay for the deduction. And that's the secret that a lot of wealthy, they understand that you don't get a deduction just for filing and there it is. I mean, you could take it to simplify it even further. Think of your mortgage. If you didn't have a mortgage, you don't get that deduction.
Right.
You have to pay that. Like, can you imagine back in 2000, whenever, when nobody was paying their mortgage, they didn't get a deduction.
Yeah, that's right.
I mean, because at the end of the year, they send you that, what is it, Form 1098 or whatever, your mortgage deduction that says, hey, he paid or she paid X, file this with your taxes. So that is something that when you're thinking about, when you head to a CPA, and I'm not against CPAs. We have groups of CPAs that we work with, and almost all our clients have a CPA team, right? If your strategy, though, is the day you show up there,
It's too late.
something like a conservation easement, you have to do it in the year of the earnings. So what does that mean? It means, like, for 2018, you had to do it. You had to take part of the program in 2018, not up until filing, not till April or in September if you're, depending on your corporation and so forth. I mean, one other thing that we would point out here, which a lot of people, I just assumed, maybe I shouldn't have assumed, when it comes to taxes, is your business structure alone can be a big difference maker.
Mm-hmm.
S Corp, LLC, or sole proprietor. A lot of people just start out as a sole proprietor, and again, like you're always saying, they push the train up the hill, then it takes off, and holy crap, they're a sole proprietor. And I've even seen some of our very high earners, they're switching even to C Corp at this point.
Mm-hmm.
Some of them have C Corp and an S Corp. There's multiple ways, but again, nobody likes to deal with all this stuff. Nobody. But it's the little things you have to position it in your brain as, for a moment in time, you got to get educated enough and take the actions, because it's essentially like that, making 120 grand extra that's not even taxable. How much is that taxable? Actually, I know in her case, they're in California. They'd have to make 240,000 to net the 119.
Right.
We're talking 120, 119, 688 in their pocket. So they have to view it as, okay, it's a pain in the you know what, but we got to deal with this now, not next year, and go in. And by the way, clients like this, one of the main reasons they got involved with conservation easement, you know why? They had overfunded their defined benefit.
That's another thing people don't realize, that they can be overfunded.
And when you do that, it's just a nightmare. And one thing I'll point out, and this is for the super high achievers out there that have massive defined benefit plans, I'm just going to say it. A lot of people don't understand one thing about it. It's public information. There's databases with your Form 5500 that you're filing every year. You can go on, I'd do it right now, but I don't want to embarrass anybody. The fact is you can go right on. Anybody in the country can go on. They see your forms. The government, seems like everything they touch becomes an issue, but they made that public information. And you can go on. And it's not just like the basic details. It's all of it. It's where's the money? Who's contributing what? How many participants? What's your actual, like numbers? It's amazing.
I'm almost sure 99% of anybody watching this did not know that.
When I show clients that, they're always like, "Are you kidding? Why didn't anybody tell me that?" And it's like, I think it had something to do. Don't quote me on this, but I think it has something to do with, remember, with all the Patriot Act and all that. And it just became like, and then it didn't ever used to be where you could just go on a computer and access databases like there's no tomorrow. Now you can, and that's public information. So it's something that, it's just not what most people would want. And again, if if you're just barely going, that's one thing. I'm talking, and this is why I tried to say at the beginning, this is for the mid six figure and out. There's people, we have $2 million a year, $3 million a year, but the 500G and up, taxes, things like this, there's other alternatives, the other possibility as well. I don't want to go into a bunch of solutions. I wanted to talk mainly about the issue is even things like real estate can create some dramatic tax deduction. Not deferral, but deduction.
From our discussions, it seems to me where you focus on people that are doing well in network marketing, I think the two big changes you suggest are implementing a tax strategy. And also, like you said, some of these people are just killing it, and that money piles up. And as you say, these deferred benefits are overfunded and become problematic. Is you also suggest vehicles and places to put this money that are both safe and tax efficient, so that it grows and that it's protected. I mean, those are the two, I think, unique things that I've seen you do. Is basically set it up so they get to keep more of what they make. And then, with what they make and they have to sock away, putting it in some place that's not going to get eroded by taxes and isn't going to be picked apart, God forbid if they die, by their heirs, that's also protected and won't be a taxable event to their heirs. That I think is just so unique.
And I don't know if it's third or fourth thing from what you were just saying, make sure that whoever you're working with has a working understanding of this industry, both the good part of it and the bad part of it. Because I'll tell you just one issue that happens, especially, this is something that happens, we've talked about it a few times. When you have, let's say, $2 million a year coming in, that's a massive organization. Anything can happen. You can lose a whole section of that and a dramatic loss of income, or you can gain a new section quickly.
Dramatic increase, yeah.
Dramatic increase. Now, if you're working with somebody that's a traditional person and they look and they don't understand your industry, here's the possible problem. They don't understand it, so they don't understand that they need to keep some serious amount of money liquid.
Mm-hmm.
So if you're deferring everything, not deferring like in a deferred account, but everything's long term because you walked in with $1 million income, you're going long term, and then 6 months later you lose a country, and now you need that money.
Right.
They need to keep you fluid enough. It's in working with a lot of these guys. What the word that I hear the most after I've worked with them for a year or two is flexibility.
Yeah.
Keep me flexible. Keep me flexible. I hope this continues, and it probably will, but keep me flexible. The other thing here, and this is just an added bonus I want to throw in here because this is the truth. This is so on point. Just to make it in that industry, and this is why I say pro ball player, just to make it, everybody watching this knows this is a fact. To make it in that industry, you've got to be super confident.
Yeah.
And a lot of you didn't start that way, but at some point your skill set took off and you got super confident. Here's the thing. When it comes to your money, that can be the worst thing that could happen to you. And here's what I mean. Bottom line is, I think I talked about this when we talked about doctors last week. Your greatest strength is your greatest weakness. And I've had to educate a lot of the clients I've worked with that are in network marketing, say, look, you're a rock star at what you do. But on your investments and things, the risk is going to be with your business. We're going to take the risk out of your financial life, because whether it ends tomorrow or whether it ends in 20, 30 years, we want it done and not chasing the wind. And here's what I'm saying, and you've said this to me as well from a lot of people you know. You guys go to these massive conventions and there's always somebody whispering in your ear going, hey, I've got this goofy investment over in so-and-so. And it's whatever. And first, if you've already built a fortress of money that can't be touched, go ahead and do that type of thing. But if you couldn't quit work tomorrow and live the life you're living, then those type of things are not, that confidence factor can't override being practical when it comes to the money. Would you agree with that, Nick?
I agree 100%.
The only other thing that I had in my notes here is if you're at, as I was saying, 500,000 and up minimum, like at that level, every day that you stay average in your advice and strategy will cost you money. Guaranteed. Why? Because you're going to lose taxes for sure, but you're also not going to have strategy to build assets and keep better cash flow. So every day it costs you money. I think that's.
Yeah, those are some good points, John. And, just to sum it up, it's like, the number one thing I think you always focus on is that tax strategy. It's like if somebody's trying to build a house, it's like the termite protection. Think of the taxes as like termites that could erode and eat away your house. And then, as you were saying, that confidence factor is they're, going along, becoming rock stars, earning a lot. It's even like gambling in Vegas. You take some of your winnings off the table, and make sure you put them to good use, while you still stay in the game. A lot of people are very good at working. And as we did a piece on doctors are great at being doctors, but we we're never taught to be business people. And we have a confidence that carries over into an arena where we really don't have the skill set, the knowledge, or the ability to keep up to the current movements to make really good decisions. So I think it's been great, and hopefully some people will get something out of this, and maybe talk to their people about if there are other things that they could be doing for advanced tax strategies, something other that they could be doing other than piling money into deferred benefit plans, like stuffing money in a pillow.
Mm-hmm.
Maybe some, forward-thinking planning for a rainy day as well.
Yeah, I'll stick a link in with this video so they can get a brochure on the conservation, just so they can read about it and be educated on it. Any questions, just shoot me an email.
I had questions
What?
on it as well. It is all tax compliant. That was my biggest concern. Okay, it sounds good, but is this going to ring bells for audits, this, that, and the other thing? And I know you really went the extra yard to research all the tax laws and compliance, as you do with all these strategies.
Yeah, absolutely. And like just for an example, this conservation easement is done by an outside firm. It's not done by my firm. And they have an impeccable record. I mean, zero issues whatsoever. There's even been a few audits simply because they work with billionaires typically,
Yeah.
and zero issues. But main thing is there are multiple different avenues that can keep a lot more money in your pocket. If you have any questions, shoot an email, text, whatever. What I'd like to do, Nick, on one of these get-togethers, I want to grab some of the clients and we'll all do a meeting.
Yeah.
And have them discuss their concerns, that they had, that they have now, whatever, because we kind of have an assortment of people that have done extremely well in network marketing, because again, it's one of the best, mathematically speaking. It is a crazy good industry with the right companies. I'm sure there's some that aren't, but the ones that I've seen and worked with the folks, they're incredible, and the math doesn't lie.
Yeah. Numbers don't lie.
I mean, I'm always laughing about it because I think I'm going to do one time, is a mathematical summary for reps to send to prospects, because I don't think it's presented in a financial way. And I know there's some probably laws against that and things, but more from an explanation of just the math of it, just the math. So anyhow, as always, fun to talk. Anything you'd like to close out with on this one?
No. Hopefully people get something out of this. I always do, just talking with you, John. I appreciate you having me on.
Well, if you weren't a doctor, I know you'd be working for, like, what's that one, Goldman Sachs or something. So you're always fun to talk to. So anyway, we'll wrap it up. John Duncan here, Dr. Nick Messina. We'll see you next time.
Bye-bye.